Welcome back. You're watching D Street, and the market which has actually begun tightening its monetary policy. But let's go across to Amit Gupta, country head sales of Taurus Mutual Fund, who joins us from Mumbai. Thanks very much, Amit, for joining us this evening on NDTV Profit. Amit, just to get started, last couple of days I've seen the market to be extremely volatile. What kind of a trade would you be looking at initiating right now? Would you go long on the markets or would you stay away?
I believe the way markets are shaping up, they are showing a lot of resilience in spite of a lot of negative cues which are coming globally. I believe it's a time when people should enter in a staggered manner and look at the opportunities which are there in the markets. We believe markets overall structurally are in a bull phase, so people and investors should utilize these kinds of a consolidation phase so as to build their portfolios.
Amit, numbers so far, Infosys, spectacular, Bajaj Auto, not too bad. What are you, that's obviously domestically. Internationally, Alcoa came in with a disappointing set of numbers. You have Chevron, which has already warned that their numbers aren't going to be very good. What are you expecting from this earnings season? What are you going to be watching out for? Is it going to, because a lot of time, we probably see a lot of rise in profitability on account of cost cutting. So what are the key concerns and key factors?
I believe, result season will throw more positive surprises than the negative ones, and there will be a decoupling in terms of the result what we have to speak about domestically vis-a-vis internationally. So domestically, as we have seen, Bajaj Auto came with a splendid set of numbers, so did Infosys and on, and we expect TCS also this weekend to post a decent result. If there could be any indication given by the dispatch number of cement or the auto numbers which are being churned month on month, we expect the results to be better than what most of the people are expecting. So we believe we will see much more surprises coming in terms of the results coming from the domestic corporates.
Amit, what about banking? Tomorrow and from day after, we could actually see banking numbers starting to pour in for the third quarter. What's your assessment here? Do you think that particular sector could be the wild card and we could see some negative surprises, particularly from the PSU space?
See, the negative surprises in the financials can come primarily from the upcoming monetary policy, the budget and all, rather than the number per se. Though up till now the credit offtake is not that high what most of the banks were targeting as of now, but I believe it will be offset by the treasury gains what they are going to make. So in terms of number, we don't believe there will be any major negative surprises or positive surprises. Having said that, it could, the upcoming monetary policy could have a bearing on the financial sector per se.
And how do you look at some of the other rate sensitives, including real estate and at this point of time? Again, the numbers haven't come in. They usually tend to come out towards the end of the result season, particularly for DLF, Unitech, the large cap names. Do you think the numbers there on a sequential basis could be subdued? Are we expecting any positive surprise there?
I believe numbers will be better because whatever said and done, there has been an offtake in terms of residential properties, though commercial properties have not shown that kind of a trend. Having said that, I will still reiterate, the upcoming monetary policy will have a bearing on the interest rate sensitive, including the real estate, the auto and the financials, which will have a major bearing more than the results.
Right, Amit, what's your call on the rate-sensitive sectors right now? There's a general sense that there could be a hike in the CRR at the credit policy, and of course with IIP data being spectacular, that does seem like the general view out there. How would you actually approach the rate-sensitive sectors? Would you continue to, or rather, do they look attractive to you or not really right now?
See, from a fund manager perspective, not very attractive at this point of time, especially with the upcoming monetary policy where people are looking for interest rate hardening. Having said that, the way India is poised with the structural bull phase and the credit demand going to pick up in the days to come, even the interest rate sensitive will show some kind of attraction. So be it auto or banks or even the the real estate for that matter. So immediate short term, not very clear which way the markets, especially these sectors are going to go. Over a longer run, yes, they will do better.
Right, Amit. Also, then if I had to go by that, if I had to keep the rate-sensitive sectors away, IIP data has been extremely good. Would you buy into the domestic story? Would you go long on sectors like consumer products, maybe capital goods, auto as well? I know it's a rate-sensitive, but it's more of a domestic-driven story as well.
Certainly, but I believe, while we are looking for a domestic consumption story, we will have to go follow a bottom-up approach. Like as you mentioned about capital goods, there will be a pocket of capital goods which are not expected to do well, especially related to capex, because most of the companies have completed their capex as of now. So yeah, capital goods will do well, but certain sectors, even, the consumer durables we are bullish about. We are bullish also in autos, but autos again will be more of our commercial vehicle side rather than on the passenger vehicle. So one has to be very choosy in terms of the stock selection, what they are doing.
Amit, in terms of how you have been managing your portfolio, again, how have you been placing yourself ahead of the Q3 numbers? Are you looking at some sectors, or are you placing your bets more stock specific? What's been the broader investment strategy into the year 2010?
The way our fund house, plays the bet, it is more on a combination of a core portfolio plus, the tactical calls. The core portfolio, the themes where we don't look at too much of a short-term valuation and all, where if we are sold on the theme, we will keep on holding it without too many changes. It might happen in the short term, the prices could be, more than the intrinsic value. But having said that, and then there will be tactical calls, like, at times we like metals, we like financials and all, but that is more of, utilizing the opportunity as and when they arise. But overall, we are bullish about the markets. We believe the market will positively surprise us on the upside in this calendar year. And that is how we are structuring our portfolio, looking into that kind of expectation.
Okay, now I'm going to ask you to do a little bit of crystal gazing. Target for the year 2010 Sensex, do you have a target in mind? And even if you don't, can you take a rough estimate there? What's the kind of expectation you're building up?
Gentlemen, it is very difficult to stick your neck out and speak about the number. But having said that, we strongly believe markets are going to surprise on the upside. We might see a newer high much earlier than what we are expecting, and we strongly believe, your Q3 numbers are going to be better than Q2, and Q4 going to be better than Q3. So I believe, prices have to follow the earnings, and if the earnings are going to be robust, we will see, the markets going higher.
Okay, so it's difficult to attach a number there, but anyways, we are all headed higher. Let's just keep our fingers crossed, and let's just hope that the earnings momentum keeps on remaining strong and we see more upside. Amit, thanks for joining us this afternoon on Profit with a check on the market fundamentals and what's the expectation as far as the numbers on the quarterly basis are concerned. Samina, so the broader consensus view in the market is the numbers are going to be good. It's only the concerns on inflation plus concerns on fiscal and monetary pullback that perhaps could play spoils sport.
Indeed, Ashu. So I guess we can keep our fingers crossed this earnings season. But yes, macro factors will play a key role going ahead and, of course, determine the route that the markets take as well. Well, that is all the time we have on the show. Keep it with the channel. Anisha and Bharat will be up next with Profit Newsroom.